No one delivers more exclusive interviews with ATA executives than CBT News. CBT News, dealers' #1 source for auto industry news, content, coaching, and analysis. You're watching Inside Automotive with Jim Fitzpatrick.
Hey everyone, Jim Fitzpatrick. Thanks so much for joining me on another edition of Inside Automotive on this St. Patrick's Day. Happy St. Patrick's Day to everyone. The auto industry has been buzzing with big topics lately, from tariffs to the growing concerns around Chinese exports. So what does it all mean for dealers, valuations, and the road ahead? Joining us now to give us his perspective is Ryan Kerrigan, Managing Director of Kerrigan Advisors. Welcome back to the show, Ryan. Always great to catch up with
Jim.
you.
Good to be with you.
Yeah. On this St. Patrick's Day.
May your troubles be less and your blessings be more, and your blessings outnumber the shamrocks that grow. Happy St. Patrick's Day.
There you go. From one Irishman to another. I'll take it. That's great. Happy St. Patrick's Day.
I wore my shamrock tie today.
I see that. Very nice. Very, very green. So let's talk about this. And you know, it's incredible things that are happening in the auto industry in recent weeks. Why don't you, I'll tee you off with that one right there.
Yeah, hey, we're all watching the headlines, right? So This is all playing out in real time, and it's just so impactful to our industry in particular. We've got global supply chains, we've got OEMs active from around the world, and so as it stands today, we've got 25% tariffs on Canada and Mexico, albeit with a 30-day exemption for those that are USMCA compliant. So basically the big three, but that's only 30 days.
Right.
We've got 25% tariffs on Europe. We've got a myriad of tariffs on China. So it's wild. It's interesting to watch. The problem is we all need to operate our businesses in automotive with some sense of what's going on. And it's really, really hard to have any sense of that. So
That's right.
Wild times here in automotive in 2025.
There's no question. We ran some headlines that kind of echoed what you just pointed out there about the tariffs and the 25%, and the uncertainty and the concerns that automotive has. And I can't tell you how many emails and text messages I got from people in the industry that said, "How come you're so negative on Trump?" so I'm like, okay, we're just reporting the news. You know what I mean? How do you want us to say it? And it is what it is, right? And it's not a vote for Trump or a vote against Trump. It's just these are the things that the auto industry is dealing with right now, right?
That's right. Right. And I think all things being equal, most business people would fall on the side of the more open, the more free, the more fair trade can happen. It generally benefits. I don't think that's a controversial statement.
Right.
Then the nuance comes is like, how open, how fair, how free is it? And then what should U.S. policy be? Clearly, Trump's taking some very strong positions in that regard. But it creates massive, at least short-term disruptions.
Yeah.
That's just where we're at for the moment.
What impact, you mentioned a number of them, but what impact will tariffs have on the industry? Just a complete slowdown of everything that we see?
It starts with just chaos and uncertainty, right? Yeah. We're kind of go back to COVID a little bit. It's a different driver, but in COVID, we just didn't know how to plan.
Right.
There were just, everything was in motion. And so there's just a level of chaos, a level of uncertainty.
Yep.
Really hard in an industry where you're, planning 6-9 months out in terms of inventory ordering.
Yeah.
And so you really have to think about where the industry is going and taking some best guesses. Just to give you a sense on how the industry or how the financial markets are thinking about it, the Dow Jones Automotive Manufacturer Index is down 41% year to date.
Wow.
So the financial markets are really, really concerned about it, particularly as it relates to the OEM. They've got the big fixed costs, much more so than the retailers, the distributors, what have you. So The financial markets are really concerned about the implications here.
Yeah, no question about it. The stock market does not like uncertainty. They want to know, good or bad, the news is good or bad. They have got to bank on it, right? And work accordingly. But this up and down and all around is kind of crazy. So there is some chatter on this. Is Trump going or is he trying to trigger a recession, or what say you on that?
There's some interesting chatter, and it's really I guess counterintuitive. As a president, you always want to see the U.S. economy grow and succeed, and Trump has always talked about that. But there's chatter on that because of the level of chaos, and then it calls into question what is the goal here. So let's just maybe step back for a second. The idea is to really kind of reset global trade relations, get rid of trade deficits, bring American manufacturing back, onshore that. And so there is a notion, and if you look, for example, what the Secretary of Treasury talks a lot about, he talks about the 10-year Treasury. And the 10-year Treasury is indicative of inflation expectations. And it also, in the event that slowing growth or a recession is concerned, you'll see interest rates come down. You'll see that benchmark come down, and then that triggers a whole series of things as it relates to interest rates. So it is very possible. I think it's fair to say, I think I'm quite confident saying that the policy goal is not a recession per se, but maybe by throwing a bunch of wrinkles into the system, causing uncertainty, breaking, if you will, kind of a fever of a high interest rate period that we've not been able to get out of for a number of years.
Right.
Could be, it could be a bit of a strategy here. No one said that, but there's chatter, and I don't think it's completely off base. If the goal is over the medium term to longer term, fundamentally reset interest rates. And so maybe recessionary chatters are considered sort of an okay trade-off in the short term.
Right. And the press is hitting them pretty hard on these questions about a recession. Whenever they're with the president, which is very, very often, like every day in the Oval Office, they're hitting them pretty hard on this. Do you think we're going to be seeing a recession? And he kind of flounders on that. He's like, well, we could see things get a little more difficult, right?
That's right. No, That's exactly right. I noticed that messaging as well. The first kind of couple times it came up, I think he pretty quickly flatly denied it. And then in recent days, he's been sort of a little more open to that idea, but always very much in this like short term versus long term. Right. So, well, there's going to be some disruption. There's going to be some short term pain, that we're going the right direction, that kind of thing. So he's not ruling it out. And this is probably part of the talking points as a team they've come up with, trying to address this issue of heightened interest rates.
Right, for sure. So what does a dealer do? How do they navigate with this?
Well, I think let's start with what I don't think is going to work at all. And that is, I don't think you can be linear about this. I don't think that you can look at what's on the plate today in terms of tariffs and just kind of extrapolate your business plan. It's just too dynamic. We don't know what's going on.
Right.
And so what I think dealers ought to be doing as best they can, easier to say than it is to do, but be thinking ahead 3, 6, 9 months and think about skating to where the puck's going to be, to use that old hockey analogy. And so some OEMs we know will be probably substantially more impacted than others. My sense is that we're going to figure something out as it relates to USMCA, Canada, and Mexico. They're very intertwined. And this is just my opinion. My gut, he's been quick to kind of send out 2 30-day reprieves. My sense is something gets figured out there, and we can talk a little bit more about Mexico later. But as it relates to Europe, and certainly as it relates to China, which I think we'll talk about later as well. But as it relates to Europe, my guess is this could be sort of a new reality for those franchise dealers that partner with those OEMs. And so that's something that I think you need to be sort of baking in. It's
interesting. So let's talk about the impact in the financial markets and how does this play out?
Yeah, so I mentioned the U.S. Auto Manufacturer Index by Dow Jones is down 41% year to date. That's pretty stunning. But really broadly, in the last month, the S&P is down by 9%. The NASDAQ is down by 13%. And so the financial markets are reacting to it. What I get concerned about in my role in the buy-sell world is we start seeing the issues with lenders. Lenders start getting very wary and losing faith in the ability to lend in this very uncertain environment. I'm not saying we're there today, but anyone can appreciate as a lender, you've got fixed upside. That is that you lend money, you get money back with the defined interest rate that you've agreed to.
Right.
You can't take big losses in that business. And so our concern is that the uncertainty that we're seeing in the financial markets and the equity markets start to spill over into the debt markets. Can't say that we've seen that today, but that would be a concern. The flip side is if all of this works and they are targeting the 10-year Treasury and it is resetting interest rates in a very positive way, then obviously that's a big stimulus to buy-sell activity. So there's potential good here, but in the short term, I do think a lot about the lending markets.
Yeah. So there's been a lot of talk about China and Chinese auto exports, I should say. What's your take on this?
It's a big issue, Jim. We've been tracking this and talking about this for a while. As recently as just 2020, China was a relatively modest exporter of cars. In 2024, they exported 6 million cars, far and away the biggest exporter of cars in the world.
Yeah.
They make far more cars than any other country. They consume. They buy more cars. Their market is bigger, and they're now the biggest exporter. This is really, really substantial, and so it's something that we're very much tracking and aware of. They're making a play for long-term global dominance of automotive. They would like to knock out a lot of the legacy auto manufacturers. Obviously, countries such as the United States and our companies and European companies and Korean companies have a say in this as well. But there's no question that Chinese strategy is trying to expand into the world sufficiently quickly to swamp sort of the legacy auto manufacturers, much higher manufacturing costs, and just dominate. And it's something that we're seeing, and it's a really big phenomenon.
Yeah. Well, one of the shows that I had you on, you brought Mr. Michael Dunn with you, who's an expert on all things China. And and he said that America is kind of on an island because China is exporting cars all around us, all over the world, except for the U.S., right?
Yep, U.S. and Canada. That's exactly right. And so it's one of these things where, you and I can have this conversation and talk about what a big issue this is, and you could have, Americans saying, what are these guys talking about? I haven't seen a single car yet.
Yeah.
It's totally misleading. We don't see them in U.S. and Canada. We think that this is not going to happen. But the fact of the matter is that scale really matters in big manufacturing businesses such as this. And the Chinese are making a play for scale that will be very hard to match for others. And so I'll pick on Volkswagen, for example, just as a moment. But, you're seeing them losing massive market share in China. They are losing big market share in South America at this time. They're starting to lose some market share in Europe. For the first time, I think post-World War II, they're shuttering plants in Germany. This is something that we have not seen in generations.
Wow.
And there's similar stories for other OEMs. I just use Volkswagen as one example.
Yeah.
I mean, they're fundamentally retrenching because of recent strategic actions on the part of Chinese state policy and the many, many Chinese automotive companies. And so they're not alone. Yeah. And it's happening. We're just not seeing it here, but that doesn't mean it's not happening.
Right. And they've got like a $19,000 fully equipped EV that if they had 100% tariff put on that car, it could still sell here in the U.S.
That's right. No, that's exactly right. I mean, they have some products, they have some price points that nobody can touch. They're part of it is because of cost advantages and scale advantages. Part of it's because of some state subsidies as well. But you're exactly right. I mean, if just kind of unleashed into the marketplace, there'd be a lot of folks that would be early adopters just based on price. And that's what's happening around the world. I mean, obviously, a lot of consumers are more price sensitive or priced out of the car market in other markets outside the U.S. And so, of course, those consumers, if they can buy a car for $15,000, $18,000, $20,000 and take a little bit of brand risk, they're willing to do that. Yeah.
Yeah. Is this leading to what's really behind the Mexico tariffs, or how does that play into it?
Absolutely. I think the way that I think about the tensions with Mexico is as much about China. So China exported 600,000 cars into Mexico last year.
Wow.
So they are a very substantial player in Mexico. They have very substantial supply chains and manufacturing and whatnot in Mexico. And so I think that's a big part of it. So obviously there's an illegal drug issue and there's an immigration issue that the United States has, and this administration in particular has with Mexico. But underlying trade is a concern that Mexico is a sheep in wolf's clothing as it relates to Chinese manufacturing, specifically autos, as their entry point into the U.S. So I think is a big part of the Mexico conversation is really about China.
Sure. So bring it home for us. How does this affect valuations for dealerships?
Yeah, so I can't say we're seeing impact today, but I will give you a very recent anecdote. The most recent project that we worked on in the marketplace. Ultimately, we're going to settle on very strong valuation, but I will say that buyers were far slower to respond. It was very interesting. It was notably different today versus 3 months ago versus 6 months ago.
Interesting.
And so I'd say that the deals, as using that one anecdote, which is very recent, deals are getting done. Valuation's still very strong, but there's no question that buyers are spending a little more time in the morning probably reading the financial news and reading the newspapers than they would normally, trying to figure out what is going on.
Yeah, for sure. And I'm sure there's those dealers out there that see the tariffs, they see what's going on in the economy, and they're like, "Oh no, not again! I'm getting too old for this." Are you getting those phone calls from dealers that go, "Listen, I've been through COVID, I've been through the ups and downs, the chip shortage, everything in between, a couple of recessions thrown in there, but it just looks like things are so uncertain. If you have a buyer from my store, I'm in."
Well, that's right. And let me layer into that. On top of that, the same person who may share the sentiments that you just mentioned, also probably has a higher net worth today than he or she could have imagined 5 years ago. Right. Because I've achieved my financial goals.
Right.
So I think the work and the toil that you mentioned, the uncertainty, the risk, all those things that sort of can tax you in your workday.
Sure.
You add to the fact that, again, the financial goals of a lot of dealers have been met, and there's no question some are saying, you know what, this is the time. I don't need to take on these challenges.
Right. Just the anxiety and the stress is just, I've had it, right? So, and with the aging population of dealers out there, it's no wonder that they might take that as an exit plan, right?
No, that's right. And I would, and to flip it, I've had this conversation multiple times in recent months. I think from a buyer perspective, this is an excellent market. There's no froth in the market. No one knows exactly what tomorrow is going to look like or what next is going to, but there's no sense of froth in the market. It's very real. And I think performance in 2024 was very understated for a lot of dealers. Some had banner years, but for many dealers, I think the performance of 2024 is not representative of what the next 5 to 10 years is going to look like. I think the averages over medium to long term are going to be far better than 2024. So if folks are deciding to sell here in 2025, I think it's a real opportunity for buyers. And sellers know what they're doing. These are savvy people, and if we're involved, we advise them. We're certainly not pushing. There are some businesses, I should say, that we're not pushing to go to market. We think that 2025, 2026 could be much better for them. I will pause there and say there are some franchises that continue to clip along at almost COVID-like levels. But for those that were really down substantially, but that's not deterring some folks from moving forward.
Yeah. So the Blue Sky report comes out in just a couple of days. What can we expect to read from it?
Yeah. So it may come out today. We'll see if we can sync up our media cycles here, but definitely out this week. 2024. Banner year for buy sells, 439 buy sells in industry, another industry record, almost 700 franchises traded. So just a remarkable continuation of this trend that we've seen year after year. Some things that we talk about, for example, real estate values have remained very, very strong in in automotive retail, which is interesting because not all sectors have been that strong. So we've been a real outlier in that regard.
Sure.
A continued use of ROFRs. We're seeing certain manufacturers really use the right of first refusal more than they have historically. If used, abused, or if overused or abused, that can be a negative impact on Blue Sky valuation. So it's something that we track. And then we also talk a fair bit about the China phenomenon, this just massive dynamic growth of the Chinese auto industry and what they're trying to do globally.
Okay. So in terms of Stellantis and Nissan, talk to us about those two franchises and those two car companies. What's your take on where this is headed?
Sure. Well, spoiler alert, in the Blue Sky report, we actually do bring down the multiples a little bit for those two brands. So we don't see, we see continued degradation in the valuation of those brands. So we can talk, that will be in the Blue Sky report as to the reasons why. What I will say, though, is that I think that Stellantis is very earnestly working very hard to put things back together. They are still searching for a global CEO of Stellantis, but there have been some important announcements, some important returning talent to Stellantis in the U.S. market. And I would say very much, I characterize them as green shoots, perhaps for a St. Patrick's Day, over where Stellantis may go. I think that there is a building consensus that Stellantis' worst days are in the rearview mirror, and better days are ahead. So maybe we'll see a lot of those businesses pop back to profitability or get back to real profitability. We'll see. So I do have some hope coming off of the lows of the last year or so. Nissan still seems to be very much in the mud in the sense that global strategy, global leadership called off the merger with Honda. It's just so hard to execute and compete well in this industry unless you've got a really good unified message and team, and they're not there yet. So I think Nissan could be a longer term project.
Yeah, and I've got a number of friends of mine that own Nissan stores, and they've reported, not all of them, but many of them have reported that their stores are still, making money and turning a profit. And obviously that's thrown in service and used cars and everything else, finance and what have you. But new car sales are a little bit off, but they're still in the black on these stores, and they still are feeling bullish about it. So that's pretty good.
Yep. That's exactly right. And you mentioned there's multiple ways, and the statement may not look that good, but you're amortizing your real estate. You've got your F&I products, your reinsurance products, obviously used car parts service, the other parts of the model. So I mean, there are, even if the statement is not showing much in the way of profitability, they still can be certainly wealth generating assets for dealers as long as they manage that P&L as tightly as they can.
Yeah. Hey, one last thing before I let you leave, and that is between the last time we spoke and now, Carvana purchased a dealership, a Stellantis dealership. What do you have any comments on that?
Yeah, they bought a Stellantis store in Arizona, I believe, somewhere in the Southwest. Yeah, a relatively small store. Yeah, and I don't think they said a lot about it. At least I've not read much about it. Certainly, we can read a lot into it. So now you've got this massive, very high volume, very aggressive retailer buying its first new car franchise. I would imagine that the choice of Stellantis is not by accident, meaning that Stellantis has other big concerns. And so the idea of approving a single buy sell, and bringing someone new into the system, they're probably willing to kind of take some risks and do some innovative things. So I think the choice of OEM is not by accident. We'll see. Obviously, one can start to put together, some ideas and some breadcrumbs and imagine that massive engine of Carvana linking up with not only new car sales, but direct access, for example, to OEM parts and things of that nature could be interesting. Now, 20 years ago, we could have the exact same conversation about CarMax.
That's right.
And CarMax did not make a big shift into new. They owned a handful of new franchises. They operated them for a number of years, ultimately just divested them, and really had no impact on the new car business. And so, notwithstanding all of their success in the used car business. And so, I guess there's a very direct historical analogy that did not lead to big impact on the industry. Will Carvana be any different? We'll see.
Well, as you know, with Carvana and CarMax for that matter, on used cars, you can put a one price sales price on there. And it's not affected by any kind of certain rebates that a buyer might be entitled to, or, incentives at the end of the month or what have you. So just managing that alone sometimes, if they maintain the one price selling structure on the new cars like they do on their used cars, you know what I mean, can be troublesome, to say the least.
And then it's just such a different beast. I mean, the used car business, you control your inputs and outputs.
100%.
It's up to you.
That's right.
And with the new car franchise, you are in a deep relationship.
That's right.
With an OEM that's got monthly and quarterly updates, that is interacting with your parts and service department, interacting with your financing, et cetera, et cetera. So just a very different beast. And OEMs, and there's no limit on how big a used car retailer can get. It's just about them capturing market share. Obviously, OEMs, as we know with the publics, have very strong opinions about how big you can get. So
that's right.
A different, but no, it'll be fun to watch. It'll be really fun to watch and see what Carvana's doing. It's been a heck of a comeback story in the last couple of years.
There's no question about it. Wow, just an incredible turnaround. So Ryan Kerrigan, Managing Director at Kerrigan Advisors, thank you so much for coming by CBT News, giving us the update. We very much appreciate it, and look forward to our next time together.
Great, thanks, Jim.
Be well. Happy St. Patrick's Day.
Likewise.
Thanks for watching Inside Automotive with Jim Fitzpatrick.